Super Microcomputer, aka SMCI, ticker SMCI, the server maker that's been riding the AI data center wave, got put on edge in the past month. The stock has tumbled hard after a disappointing fiscal Q4 print and a weaker short-term outlook, and investors are skittish because the company also disclosed material weaknesses in some internal controls. That cocktail of missed expectations and governance questions sent traders sprinting for the exits. But before we toss the company into the burned once, never again pile, let's pick apart what went wrong, what management is doing to fix it, and why SMCI's partnerships and product portfolio still make it one of the most interesting plays on cloud, 5G and storage infrastructure. The tumble, what happened and why people panicked. In early August, SMCI reported fiscal Q4 results that didn't live up to street hopes, revenue missed expectations, margins disappointed, and guidance for the next quarter was softer than many models anticipated. Markets are unforgiving when expectations are sky high, and AI server companies have been priced to perfection. The result, a share price plunge that, across the last month of headlines and trading sessions, was on the order of the kind of drop that gives portfolio managers headaches. Some outlets reported near 30% swings around the news cycle. To be concrete, Q4 revenue landed around $5.8 billion, up year-over-year but below some analyst forecasts. Adjusted EPS missed, and the company trimmed near-term outlook even while keeping a loftier full-year target. When you combine an earnings miss with any hint of control problems, it's a toxic mix for confidence. The governance flag, material weaknesses and the trust problem. The worst part from a market confidence perspective wasn't only the miss, it was the disclosure of material weaknesses in internal financial controls as of June 30th. That triggered alarm bells because investors worry, if the books and controls aren't rock solid, how reliable is the story management is telling? Bloomberg and other outlets flagged the control issues, and even though the company says it's taking remediation steps, investors generally prefer the remedial work already done rather than promises to fix things. SMCI has been through governance scrums before, special committees, auditor changes, so this isn't brand new drama for the firm, but it does mean extra scrutiny, slower trust rebuild, and potential headwinds when negotiating big contracts. Think of it like a restaurant that served one bad batch of soup. You can apologize and change the recipe, but some customers will avoid the soup aisle a while. Management's response, remediation, reorg, and raising a war chest. What did management do? Two big moves. 1, they disclosed remediation efforts, internal fixes, process tightening, audits, and 2, they strengthened liquidity by raising capital when markets would still take it, convertible notes and other moves to ensure working capital. That's defensive but sensible. You want runway to fund DCBBS rollouts, more aggressive production, and working capital needs if sales cadence gets lumpy. The trade-off is dilution and short-term skepticism, the reward is optionality for scale. In plain terms, they bought time. Whether time converts to execution depends on how fast and cleanly the control gaps are closed, and whether new sales materialize without margin erosion. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. The partnerships, NVIDIA, AMD, Intel, and why those matter. Here's the bright side that gets less airtime when the stock is collapsing. SMCI's partner roster reads like a who's who of data center computing, NVIDIA, AMD, Intel, and others. Those are not cosmetic relationships. Supermicro designs, integrates, and ships rack-scale systems optimized for those vendors' CPUs and accelerators, from NVIDIA Blackwell/H100 style systems to AMD Instinct racks and Intel-based blades. That ability to support multiple OEM ecosystems makes SMCI attractive to hyperscalers, telcos, and storage customers who don't want vendor lock-in. It's a distribution and engineering moat. SMCI can be the integrator that turns silicon into deployable campus racks and turnkey AI clusters. Why is that important? Because when hyperscalers or national cloud providers want a turnkey AI campus, they care about systems-level engineering, thermal design, direct liquid cooling, power density, and supply chain reliability, not just the silicon name on the die. SMCI sells the whole package. Product arsenal, DCBBS, DLC, and turnkey racks. SMCI has been public about its data center building block solutions, DCBBS, and direct liquid cooling, DLC, offerings. Those are explicitly targeted at AI-scale deployments where power density and cooling matter as much as raw compute. DLC lets data centers cram more GPUs per rack while keeping power and thermal budgets sane. DCBBS promises faster deployment of full cluster infrastructure to big customers. If deployments scale, margins can follow. System integration, services, and customization pay better than commoditized bare metal sales. To picture it, other server vendors sell the chassis, SMCI sells the fully kit race car that comes with a pit crew, tires, and a GPS they wrote themselves. That makes it stickier for customers building AI campuses. Why the market overreacted, short term, but why that creates opportunity. Markets are emotional. In a hot vertical like AI infrastructure, a single missed quarter can trigger a disproportionate sell-off because so many investors were positioned for perfection. Combine that with governance noise and an equity raise, and you get forced selling, margin calls, and headline-driven volatility. That's the short-term story. The flip side, when the market overreacts, it creates optionality for long-term buyers if the fundamental drivers remain. SMCI still sits squarely in the path of a multi-year build-out of AI campuses, 5G edge facilities, and hyperscale storage expansions. If those secular trends remain intact, the sell-off may be a painful but temporary repricing. The data center opportunity, why SMCI could soar, if execution stabilizes. Let's be explicit about where the upside comes from. Hyperscaler CapEx for AI. Large cloud providers keep spending on training and inference capacity. SMCI's turnkey racks and DLC expertise are exactly what customers ask for at scale. Edge/5G deployments, telecom and edge compute customers will need dense, ruggedized servers for low-latency workloads. SMCI's portfolio targets that segment. Storage and HCI growth. As AI models and dataset sizes explode, demand for high-density storage racks and NVMe arrays grows, and SMCI offers validated solutions there that could hit it to $450 in coming decades. International deals, regional cloud and AI campus projects, e.g., partnerships in the Middle East and Asia, create multi-billion order potential if procurement cycles finish. If SMCI can close the governance chapter and show the market predictable execution, steady shipments, improving margins, and concrete hyperscaler commitments, the stock can rebound sharply. Remember, the server business is cyclical but enormous. Small share gains can mean billions of incremental revenue. Note this as well. The thief cometh not, but for to steal, and to kill, and to destroy. I am come that they might have life, and that they might have it more abundantly. John 10:10. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today. Your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video. subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.